what does the negative print tell us about demand and supply that we didn't know, say, last week?
So I think it's important to understand that in commodity markets, and frankly in any market, but in commodities particularly, prices are signals. And we needed a very strong signal for producers to shut their wells, and clearly that signal haven't quite come. By virtue of prices collapsing into negative territory, now we're going to have mostly producers in the North American basin looking very closely at their operations and most likely shutting down a lot of their wells. Again, this is something that was happening, but too slowly to match, of course, the collapse in demand. And that's the signal we're getting. So I think the market will rebalance a little bit here, but we need demand to start recovering. I think that's also very important.
So, Francisco, when we talk about that shutdown or the potential shutdown of some of these drilling operations, where is that equilibrium level? Because we obviously had that OPEC Plus deal, which is going to remove 7 to 10 million barrels a day off the market. How much more, like what's the threshold where you think you could bring us back into balance with regards to production coming offline?
So, look, I mean, I think it's important to understand also that the BRENT contract in June has been holding up a lot better today. And this is an important feature of commodity markets. So there's a physical deliverability associated in many cases to a futures contract. So if you were caught up holding that contract at the end of the day tomorrow, you're going to be getting WTI barrels at Cushing, Oklahoma on a ratable basis throughout the month of May. So you better have storage, or you better have a refinery that can take those barrels. Now, on a global basis, it's a little different. The balances are different, but nonetheless, they're still pretty dire. So to your question, we're looking at roughly a drop in global oil demand this quarter of around 25 million barrels a day, or 25% of demand globally. Remember, transportation makes up around 60% of aggregate demand. So we are looking at a transportation drop of almost 50%. Now, if you look at flights, if you look at cars being driven today, that's roughly where we are, and that's the drop that you're seeing today. So that's where the market is, and then the supply, to your point, is about a 7 to 10 million barrel a day drop on OPEC. That's 7 to 10% on a 100 million barrel base. So we need to see a deeper drop there too. But again, it's all going to depend on how quickly the economy recovers, and if some of the signals being sent from the White House that maybe by May or mid-May we're going to have some businesses back, maybe that kind of helps the market rebalance.
Right. Well, we're all kind of stabbing in the dark right now because we don't know when any of that will happen. But when you talk about the rebalancing effort, the global energy market is so fragmented. How long does it take to rebalance? Because shutting down operations, whether you're doing this in the U.S. or in the Middle East, is not something like flipping a switch. It takes a while and it's expensive. How long does it take to do all that?
Well, I think it's going to take a few weeks, but I'll tell you what, we have had negative pricing before in many commodities, right? In many energy commodities, particularly electricity happens often, and also in natural gas, we had an episode of very negative pricing last year in the Permian Basin. So it took a few weeks for the market to rebalance, and eventually it did. And I would expect this to be the same. I think the May contract will be obviously is very dislocated, but I think everyone's going to be looking at June and taking signals from what's happening to demand and whether that demand is recovering. If it isn't, then June could very well end up following May all the way down.